Good morning, everybody. This is your S&P 500 day trade setups for today. So a couple of things on the go here at the moment. And the first one is we're not really moving anywhere. It is Thanksgiving weekend, which kicks off tomorrow. So it's a long weekend. And typically what happens is you either go sideways into the weekend, and then when futures opens, we have a big move in one direction. Alternatively, we'll get that move before the Thanksgiving weekend. So at the moment, this is consolidating. These levels have not been tagged. So we had a level down here, which we were looking at yesterday, which is 46.36 area. Didn't come down to tag there. It also did not sort of bounce off 46.73, 46.74 area, which if it had bounced off that, that would have been, the bottom of the potential range. So at the moment, I suspect this is the area we need to aim for, which is 46.35. Not that I want to be short. There is divergence brewing. For as long as we do not drop below the low of, when was this, 2 weeks ago, that's 46.32, then this divergence is in play. You can see it's already starting to head below. Both of them are heading below the previous swing low. So that is continuation divergence. So consolidation pattern with divergence often comes along with a flag or some kind of a consolidation pattern for a breakout. So I suspect there's still more upside. It's not something that I want to be shorting. The question is just, where do we buy? So if we look at the 3 hour, big up, big down, big up, busy with a big, little down, but more than likely be a big down. So pattern will more than likely repeat itself until the US Open. So I suspect either we're coming back to 46.73. Let's do this an hour rather and give you a little bit more clarity. So that's the first area. So we did get an attempt to bounce off here. You can see a pin bar and an inside bar and an engulfing bar here. So 3 bullish patterns, but not off a level. They're just underneath the level. So not something that's strong enough for me. Oscillators grouping to the upside as well. Crossover of all the moving averages right now. So for me, the bias is still, we're looking for a move to the downside. If we start breaking above that area there, which is kind of the high of yesterday, that's going to set up a little bit of a inverse head and shoulders. There's a shoulder, there's a head, and this would be the shoulder. So provided we don't break below the low of yesterday, that pattern would be in play. I suspect we're probably just going to bounce around here until the European Open, and then we'll see what happens from there. So play of the day, quite simple. If we find support at 46.73 and we start getting these kind of patterns on the level or above the level, that's your cue. You're more than likely looking for the top of the level, which is the top of the range at 47.16. If we don't do that and we sort of get through this and start rejecting like we were here, then a break of the tails of the bar that is rejecting it is a short scalp entry, stop above it, and then you're looking at this next level, 46.32. Me personally, if we do get through here, I'd rather just wait for a long here. So I have limit orders in at 46.32.5 or 46.32.6 or something like that, just to cover my spreads. So that's kind of the view I've got. If we do break above 46.95, it basically means we're flirting with 4700. That's what we're really doing, is we sort of waiting for a weekly close above or below 4700. So everything to play for today, I think, is sideways. So I'm kind of sitting on the sidelines until either a deep pullback happens or a decent sort of breakout of this level, and then I'll be looking for a breakout of 47.16 for a continuation to the upside. But until we get some structure, it is sit on hands. Anyway, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.